Well, the Bank of Canada is holding its key rate steady at 5%. That announcement coming out just moments ago. That follows two straight hikes of a quarter point each. Financial advisor Alan Small joins us now with some thoughts on today's announcement. Not surprised about holding steady. Why?
Definitely not. Obviously the numbers we've been getting recently, economic data coming out of Canada has been quite weak. We actually saw first quarter negative GDP. The second quarter, we saw downward revisions for the first quarter. Things are slowing, and I think the Bank of Canada sees that, and I think definitely a pause at this point was expected by many analysts, including myself. And I think the question now becomes, do they raise one more time before the end of the year? And if not, when will we actually see rates start to come down? Some people are saying maybe by mid-2024.
How do you think this is going to impact, the economy, the housing market that has, we just read the numbers that were fairly stable from last month. We didn't really see too much of an increase in sales, new listings. How do you anticipate this is going to impact people, whether they're, they want to take out a line of credit, whether they want to go try and get into the housing market? Do you think this is going to impact anything, or is it just going to remain stable moving forward? Yeah,
so I think today's announcement obviously doesn't change a whole lot. Overall, it's that mentality of higher for longer. The longer these rates remain at these levels, I think the more of a slowdown you're going to see. Obviously, things right now are stable. And the Bank of Canada, for now, is happy with what they see with respect to inflation coming down. Remember, inflation used to be over 8% not that long ago, a year and a half ago, now down just above 3%. So we've seen inflation come down. Still not down to where the Bank of Canada wants to see it, which is in and around 2%. So how much are they willing to, push the envelope to get that last percent going from 3 to 2? Are they willing to go another quarter point and risk perhaps taking this economy into some sort of recession, whether it be mild or maybe more steep or deep? Overall, I think that last percent will be very difficult to get. And so, again, we'll see what the Bank of Canada does. The hope for me is that over time, with rates being as high as they are, for as long as they look to remain this high, I think inflation will gradually work its down towards that 2.5% range. I guess you just got to be a little bit patient.
I'm curious, how is this impacting your business, as a financial advisor? How are clients, weathering this, interest rate storm that we've been through for the last year and a bit with 10 plus hikes? And we're now seeing, rates that haven't been this high since I think it was 2001. What are you seeing from your clients?
That's a great question. And I actually noticed a bit of a change over the last year. I find a lot of investors actually taking out money from their accounts, whether they're tax-free savings accounts, RSP accounts, or regular just investment accounts, and they're using this money to pay down debt. And very different than what we saw just a few years ago when money was pretty much free and you could actually invest using borrowed money and it was very cheap. So a lot has changed over the past year.
Alan Small, we appreciate your time.